Hello everyone, and thanks for tuning in to this week's Market Outlook by Exness. Before we start, let's check on the performance of last week's idea about the short position on Ethereum after some correction to the upside. Last week's idea was partly correct because the price did reach the correction area of 1,250, but due to some unexpected performance for the NFP last week, it pushed the price of Ethereum even higher, invalidating the second half of the idea about the short position and a move down. Here with us we have Stanislav Bernikov, trading specialist at Exness, to provide the trading idea for this week. Thank you, Stan, for joining us.
Hello, Andreas. Thank you for having me today.
So what are your thoughts for this week?
All right. So this week we have publication of US CPI, which is inflation on Thursday, really important publication. And the overall trend or the narrative, which is right now very important, is the declining of American dollar. This is visible across the board. So softness of Fed drives the USD down. And that's why I'm thinking of a potential breakout trade for gold, which has an inverse correlation with the American dollar. So one has to be careful because it doesn't pay off to jump at the top. But if we would see any triangle or some kind of a consolidation, which we will observe on the chart, it will be visible to play a breakout trade. However, this trade is conditional because should the CPI number be softer than anticipated, the breakout probably will be successful and quite aggressive. Should the CPI number be, higher than anticipated, so gold might easily plummet and easily we can see the profit-taking rally here.
Okay, and what are the narratives behind this idea, and what do traders need to pay attention to if they are going to proceed with initiating such a trade?
All right, so the first very important narrative, of course, is the recession, which is underway or anticipated by most big institutions. And we see that hawkishness of Fed is no longer that possible for February. You see that only 20% of traders are anticipating the two-step hike for February's meeting of Fed, so probably we have a chance of having just one-step hike. This is one thing, and another thing is declining inflation. We see here in the economic calendar that it's moving down, and the expected publication is even lower, it's 6.5%. So if this publication will be even lower, so that means more pressure on the American dollar and more support for gold and Euro USD.
Okay, so in summary, the trading idea for this week is a potential breakout for gold after some minor contraction. The narratives behind this idea or the factors affecting is the declining inflation working against the dollar, the less hawkish stance by the Fed, pushing the price of dollar even lower, and the recession narrative, which is still in play, pushing the price of gold to the upside. Thank you, Stan, for providing the idea for this week about gold.
Thank you for having me today. Have a good trading week, everyone. Be careful and manage risks.